Hello everyone, my name is Darryl Kwao. Welcome once again to the Bulletin. Now, the Governor of the Bank of Ghana, Dr. Ernest Addison, has confirmed that the planned capital increase for banks would be announced in 3 weeks' time. The Governor disclosed this at the annual general meeting of the Ghana Association of Bankers today.
Be doing to help the domestic banks to raise additional capital. As always, the environment has to be an enabling one for a successful international financial services center, in particular the macroeconomic environment. And you know the work that has been done in this area this year. We've seen a significant improvement in the macro environment. And the inflation rates have come down, the exchange rate is stable, and we expect that this progress will be sustained in order to underpin that financial services center.
Well, speaking at the same event, the Finance Minister, Ken Ofori-Atta, justified the need for the minimum capital requirements for banks to be increased.
Certainly, in our view, lending rates should be in single digits, and this all to enable the private sector to be able to thrive and do what they are supposed to do. And that seems to me to be a challenge as we look at the number of banks and exactly what we have to do to strengthen them. Then when we began to develop the whole pensions industry, the issue was finding long-term capital, because we don't have much of a mortgage industry, which means that real estate is problematic, and that is key to drive most economies. And we've had this new pensions law since, I think, 2008, when it was promulgated. But truly, I don't think the benefits of it, have really accrued. So that's another intervention that we are looking at to begin to develop certain instruments which could be used for Tier 2 capital, so that we can shore up the capacity of the banking sector.
Well, in a related development, the Finance Minister has noted that government is committed to making Ghana an international financial services center.
But I think really the issue of Ghana becoming a financial services center is key to what the President wants to achieve. Because without a robust financial system, certainly the issues of industrialization and Ghana as a hub becomes problematic. And our challenge then is how do we look at the 33 plus 3 banking licenses banks that we have, and manage to drive a place that is a magnet for financial services, so that we can make the type of progress that we need to make. But within that construct is also a clear indication from the presidency that we also need to have some 5 or so well-capitalized indigenous banks, so that you have a system that is well represented with that. So that's one.
All right, so that was the Finance Minister addressing the annual general meeting of the Ghana Bankers Association. My colleague George Afe was there, joins me in studio for some more discussion around this, George. And so what has been the reaction to the banks, to the confirmation we are getting now from the Bank of Ghana that the minimum capital requirement is going to go up in 3 weeks?
Well, the Finance Minister first spoke on this particular issue, and his announcement was that it would happen in 2 weeks' time. and it would be quite substantial. And then the governor came in and said, okay, 2 weeks, it would happen in 3 weeks. But he didn't talk about it being substantial. Now, for the capital levels right now, you're looking at 120 million Ghana cedis. Now, substantial, we've heard about some 200 million Ghana cedis, some 260 million Ghana cedis. Some are even talking about 300 million Ghana cedis. Some are even talking about 500 million Ghana cedis. So maybe if we should go with what the finance minister is saying as being substantial, then we could be looking at a little over 500 or even 300 million Ghana cedis. But unlike previous instance where it was just we're all in the industry and we just heard that the Bank of Ghana was going up, this thing has been in the news for quite a long time. As far back as last year, there were engagements with the commercial banks to up the capital. So it looks like for some of them, they are well prepared. For the tier 1 banks, the big banks like the Stanbics, the Barclays, the EcoBank, they might not have a problem with this. But for the new entrant into the industry, I mean, they just brought in 120 million Ghana cedis. Now, going back to their shareholders to increase it to either 200 million Ghana cedis or 260 million Ghana cedis, that might be interesting at a time when also some of these banks are actually struggling to improve their capital adequacy ratio and even meet that 120 million Ghana cedis. It could be a tough time for them. If the Bank of Ghana doesn't lengthen the time for them or even give the local banks some special dispensation, just like what we had the last time when the capital was increased, then it looks like some of them might struggle and they might have to merge, be acquired, or lose their license to operate as a commercial bank.
Okay, and just for the benefit of those who are watching and wondering, we've been talking a lot about the minimum capital requirement. What is it, and why is this coming up? Why is it that the central bank wants to increase the capital requirement now?
So let's just say that Dara wants to start a business, and I'm a regulator. I'm saying that before you begin that business, you need to have some capital that I would hold to show that you are well capitalized, so that in times of trouble, we might be able to fall on that capital, or to show that you are well strong to be in that business. And if you look at the Ghanaian economy, it has been expanding. You have several developments happening. When you even value our economy right now, some are putting at 250 billion Ghana cedis, the oil industry and all those things. So a lot of pressure on these commercial banks. Most of the time, they go to the Bank of Ghana asking for waivers. The current banking law says that you cannot extend capital to one individual more than 10 or 15% of your total capital.
Okay.
So you're looking at finance or projects ranging between $10 million, $50 million, $100 million. These banks are always going back to the Bank of Ghana, give me waivers to grant this capital. So the Bank of Ghana thought that we've gotten to a stage where you need to increase your capital and become big and expand. That could come in the form of asset, that could also come in fresh capital that you might deposit at the Bank of Ghana. So there have been some development in the economy that warrants this increment. And also for the banks themselves, there are bigger projects that are coming into the economy. If you want to play a part in that bigger project, you need to up your capital. And that is why it has gotten to that stage. It has delayed because of some banks who went to some troubles. It was 9 banks. We are hearing that it's gotten down to 2. These 2 banks are in serious financial distress, and very, very soon, the Bank of Ghana is going to take action on these 2 commercial banks.
Okay, so how does that affect me if the capital requirement is going to go up?
It would really, really affect you. Let's first start with the bank. So they'll be able to take on big transactions. And the bigger transaction that you undertake as a bank, the more profit that you have. So if you're able to grow your profit as a bank, 2 things. One, you can plow back those funds into the bank to aid expansion. Now, for bank, you don't have to sit on your funds. The more the funds go out and work for you. So if a bank has about $200 million, you have to see how you can deploy those funds to make money. Within a day, every hour, 1,000 Ghana or even 1 cedi can triple the value for you. So if their capital is increased, then they might be forced to move out of their comfort zone and lend. Some are saying that it could have implications on the cost of credit, because if your cost is too high, I won't come to you. So if you have to lower that interest so I can come to you, then that would be good. Also, if they are lending to more local businesses, it means that we see more projects happening. When these projects are ongoing, they have to employ, they have to pay you. If, for instance, multimedia can walk to Barclays and borrow at 3% or 10%, that has implications on expansion of multimedia. That has implications as well on meeting your salaries that you're looking for, asking for more salaries to be paid to you.
Let's talk about the reaction from the banks to the announcement by the finance minister that we're going to settle all the debts that the government owes the banks by next month. You've been speaking to, I believe, the chairman
and Daniel's president of the Association of Bankers, or Ghana Association of Bankers, at this meeting, and he was quite excited about this, and he's been speaking about how this could impact, or how that would impact the cost of credit in the country. Let's watch him.
Very welcome news, very, very welcome news. And we've always said that the chunk of public sector debt that has impacted the non-performing assets of banks has been a big drain and on the banks. And therefore, we take the minister's comments very seriously, and that it should create more healthy balance sheet and bring some liquidity back into the industry.
One would ask that again, what would these payments also mean to the financial position of the banks in terms of liquidity, and also some would say cost of credit?
No, look, I mean, once because the non-performing assets is a huge cost to us, and therefore once they become liquid and paying, that cost is reduced. The liquidity that is also tied up in those assets which we can no longer circulate now becomes liquid, and we can circulate that. So for me, it solves that double problem of illiquidity and also cost.
Let's also come back to this issue about this APRs as well. And it's interesting because some would say that we thought that prices have been going down, but rather we have seen some marginal hike in the cost of credit.
No, you have to look at this in terms of a trend. You know, interest rates or the APRs that were published are historical, and it's coming from the backdrop of very high operating costs of banks, very high interest rates then, you know, which is only beginning to drop, and also the impact of the high NPLs. But yes, we began to see the 91-day Treasury bill drop. We've also seen the NPR come down. We've seen the non-performing loans coming down. So if you project again the APRs to the end of the year, you would definitely see a decline in lending rates.
Interesting. Again, let me also come back to the bit of the report which spoke about the fact that Stanbic Bank offered the best interest on deposit as well. In times when cost of credit is very, very high, you still manage to offer some good returns to depositors.
Well, look, again, as I said, these are the lack factors that you pick up deposits, good rates, which run for some time. So even as your initial benchmark, which is T-bill plus, drops, you are still on the first contract that you granted. So that's why you still see, our rates high. But look here, for us, paying realistic deposit interest rate is just part of our strategy. We want to make it worthwhile for depositors to continue to leave money with the banks, and that's why we pay.
Finally, before I let you go on the cost of credit, at the AGM you spoke about it. Are we likely to see cost of credit decline significantly from next month?
Yes, we are hopeful, and as I said, the central bank is replacing the old interest rate calculating formula by tying it to the treasury bill rate and policy rate, and then the interbank rates, and all of these are coming down, and really they are very independent rates, and we should see from the current trend that we have seen so far, treasury bill rates have declined from 23% to under 12%, and the MPR has moved to where it is. So we expect to see the base rates generally come down by September.
All right, and George, we are getting a reaction from an economist on what this means, or how it is going to affect the banks, it's going to affect the economy as well. What's been that response you're getting from Charismatic?
It's more of the good, the bad, the ugly. Now, the fact that if finance minister is indeed committed to this, that he's going to pay these debts, for any sector that it's about 2.5 billion Ghana cedis. There are other related debts that could ramp up to like maybe 3 billion, even 4 billion. Push 4 billion Ghana cedis into the economy in 2 months, and your problem will be inflation. It's bad news. It could shoot up government's fiscal position and all those things. But on the contrary, Courage Marty thinks that it's a good thing if it's well managed, so we shouldn't be worried at all. Watch him.
Well, I don't see any cause for concern, George, mainly because, of course, on a weekly basis, the central bank is also mopping up liquidity from the system. And so once they see that that is going to inject too much liquidity relative to economic activity, you expect the central bank to come on board and mop up that in BOG bills that we see every week. Having said that, we also have to recall that there is this concern about the TSA and the liquidity challenge it could pose to the banking system if it is done, on a whole scale. Now, if this injection of payment of this debt comes to inject liquidity, that should counteract the drain in liquidity as a result of the TSA implementation. So, give or take, I believe that there should be some balancing out to manage the liquidity situation.
Let's look at the good side of as well. When you release this amount of money into the economy, again, I know for some businesses, they've started balancing their books already, waiting for these monies to come. What could be the impact of this also on the economy in terms of the good side as well?
The good side is that the banks then have credit or liquidity to lend to the private sector. If you look at the MPC data that was published last month, what you will notice is that despite the sustained decline in the policy rate, we've not seen a commensurate increase in the lending or loan book advances of commercial banks. So the loan book has not been growing. It's remained around 36 billion cedis since the start of the year. That shows that the policy rate reduction is not reflecting in the growth in loan book, mainly because asset is tied down in non-performing loans. Now, once this payment is done, you have these loans now performing and liquidity injected back into the banking system. And the banks will have to work with this money. And so they give it back to the private sector as credit. Now, with the improved quality of assets, risk rating would reduce definitely. And once the risk profile reduces, the risk premium that is charged on credit should go down, and the lending rate, which is the cost of credit, should also go down.
So it's more of good news for the economy rather than us thinking that it's more of a bad thing.
It's more of a good news because of your banking sector is the fuel that drives economic activity. If you release capital back into the banking sector, they would be efficiently able to allocate this capital to productive sectors of the economy, and the economy would grow. But if you tie down that capital in the form of non-performing loans and other things, then it hurts the economy. So generally, it should be a good thing, but we need to manage the liquidity implication very well.
Well, sounds like good news, George.
Darryl, so good news. So we are all waiting for this money to be released, and just like waiting for your parents to give you some money or waiting for it to be paid, and how you do the calculations, waiting for the money to hit your account, and you go chilling like nobody's business.
Enjoy your weekend. George, you're there with that update. We want to move on to another story we've got eyes on for you today. Now, it is estimated that government needs about $34 billion to address the current housing deficit. The country's housing needs is in short supply of 1.7 million units and is projected to climb to 2 million by 2018. The situation requires the introduction of pragmatic and deliberate policies, and government says it cannot do it alone without private sector participation. Charles Aite has a report from the ongoing MNC Multi-TV Habitat Fair.
This year's Habitat Fair has seen over 25 exhibitors converge on the Accra International Conference Center with the aim of offering affordable housing for Ghanaians below the middle income bracket. Deputy Director of the Ministry of Works and Housing, Dr. Theresa Tufor, has hinted of the speedy passage of the Real Estate Act so as to streamline the housing sector.
We believe that within this year it should be passed. The Real Estate Agency Bill should be passed. It's not only the Real Estate Agency Bill. We think that there should be policy cohesion, and we are also looking at condominium bill because there are a lot of condominiums and gated communities that are springing up recently. So we also have the Rent Act, which is being reviewed, and then the building regulation as well. So we have quite a number, about 4 bills that we're working on at the ministry currently.
Speaking to Joy Business, Executive Director of MNC Properties, Eric Cody, assured prospective clients of massive discounts up to 25%.
We intend giving them as much as 25%, and but we have other plans as well. They can come over, we'll talk about what other problems that they want us to address. and then we'll take it from there. We are prepared to listen to them, work within their budgets, and see what we can do to ease their plight.
On his part, head of Sethi Realty is impressed on banks to ease up their cost of loans so as to leverage the overall cost of their products.
The lending institutions have lost their voice when selling their products to the indigenous. The only place where you will actually find information on mortgages is indeed within the banks. I am charging all the financial institutions to come out of their institutions and sell the information.
Meanwhile, Joy Business caught up with some other exhibitors who say this year's fair comes with great opportunities.
This is my first time coming here as a person, but DBS has been here over and over again. And from the reports that I get, DBS has benefited a lot with the Habitat Fair.
It's a good opportunity for a company like Grand Pacific to showcase what we have and what we do for our clients in Mother Ghana, in the sense that we participated last year. When those who come by, and then the publicity we are getting, definitely will expose us to a number of people, those who don't know us and those who also already know us.
The 8th edition of the Joy Habitat Fair is underway here at the Accra International Conference Center. Massive discounted sales, if you do ask me, as tens of patrons and prospective clients have currently thronged the entire scene of the Accra International Conference Center to get for themselves the best of deals at very low prices. The main aim for this very year's event is very simple: affordable housing to help bridge the 1.7 million housing deficits that the country is currently being faced with.
All right, we'll remain in this space a little while longer because the local content policy for the construction sector is now finally expected to be rolled out in the coming weeks after being subjected to the final scrutiny. This is according to the chairman of the construction subsector of the Association of Ghana Industries, Roxin Dogbegan. Here's Ebenezer Sabote's report. Ghana's construction sector will now have a documented policy to back its operations, especially in bidding for contracts from the public sector. Indigenous contractors believe it should ultimately enable them compete favorably against their foreign counterparts who are backed by some policies of their home countries. According to the chairman of the construction subsector for the Association of Ghana Industries, Roxin Dogbegan, the committee is undertaking final scrutiny before going ahead with the launch. He explains how crucial this is.
All we want is there's the need to accept that reality that Ghanaian construction companies have what it takes to deliver. What we need is a deliberate intervention from stakeholders, government and the contractors themselves to step up their game and make themselves relevant for use. And government must come with interventions to grow and support the development of the locals as well. And there's the need to have deliberate policies like what we are pursuing, the local content policy, which somehow will create further enabling environment for the Ghanaians to be able to compete with others as well. Once that is enhanced, we expect that there shouldn't be any barriers.
Mr. Dogbegan spoke to Joy Business at the second validation workshop for the development of the draft policy. He added benefits of the local content policy go beyond the sector.
Well, I think that there's a need to have some attention to grow and develop the construction industry in Ghana, taking it from the angle that it contributes very significantly to the growth and development of Ghana. Now, the contribution of the industry is about 14.5% to GDP, and that is huge. And so it's about time we pay some attention to growing the construction industry in Ghana.
The policy will also regulate payment of all contracts to ensure prompt payment for the supply of construction goods and services by the private sector. You're watching Business Live. I want to bring you now our interview of the day. And the One District, One Factory Program Secretariat has welcomed calls for government to institute a special training program for entrepreneurs to be engaged in the program. According to the National Coordinator, Gifty Ohene Kunedu, government plans to employ entrepreneurs in areas of the program that may have limited human resource. She expressed government's resolve to sustain the One District, One Factory initiative.
Interview of the day.
You know, in some cases, or in rare cases, you get some districts that are not too attractive for entrepreneurs. When that happens, because His Excellency made a campaign promise, we have to do that to fulfill our promise. So when it happens that way, then we'll build and equip a factory. But within the shortest possible time, we'll have to look for an entrepreneur to take over so that
even when it is not economically viable, because it's a campaign promise?
I think that in every district that you go to, you find something that's economically viable, a product that is economically viable. But just that because of reasons like distances or other reasons, some districts are not too attractive to entrepreneurs. Sometimes they want to be closer to the big towns, and some districts are not too big and they lack a lot of amenities. So it's difficult for entrepreneurs to go to such districts. And when that happens, then the government takes up that responsibility of establishing the factory.
Interview of the day.
And thanks for watching our program tonight, the Small Business News, on our website, myjoyonline.com/business. My name is Darryl Kwao. I'll see you next week on Business Live.